Morning.
Okay, morning. And where were you all in the last class? I mentioned it before, but no one have attended that class.
We've attended, you said that last week, Thursday.
Yeah, I said that we will be having a class on Thursday, but no one have attended that class, and because you were not there, so I just recorded that class. And
Okay,
today we're gonna do the block number 6.
okay, no problem. Let me inform the
Today,
others that class has
yeah,
started.
inform the others, and please give one information as well, because you guys didn't attend the class on Thursday. That's why I skipped the class of Saturday, and we will be having the Saturday class, last Saturday class today. Okay, means
Okay,
three. Today we will continue the session. It will be a 4 hour long class. In this class, we will be doing, for first 2 hours, we will be doing financial accounting, and for next 2 hour after that class, we will be doing the last block of financial management or
okay,
management. Okay.
okay.
So this is the last class of your session. So please inform
Yes,
everyone.
okay.
Okay.
So after this class, are we this last session? Are we continuing the classes or are we having our assignments and exams? I don't really know.
This information will be given to you on that email portal. Okay, it will be provided to you. Okay.
Okay, man.
Okay, have you informed the class? Have you informed others?
Yes, they are trying to join in.
Okay. So without any delay, we will start our session.
Okay,
So today we're gonna do the last block of financial accounting, and the unit number 18 means this whole block is related to the computerized accounting, because these days we do not do accounting on a pen or paper. In companies or in business, we prefer computerized accounting. We have softwares for that. All right. Moving straight to the unit number 18. Yes. Unit number 18. Introduction to Computerized Accounting and Creation of Company. Alright. See, computerized accounting systems involve making use of computers and accounting software to record, store, and analyze the financial data. We have learned about the accounting, the rules of accounts, the format like journal, ledgers, trial balance, and balance sheets. But now we have to connect the accounting with the computers. Means computers are doing the major part. We just need to put or record the data in the computer, and it will prepare all other things like balance sheet or ledgers. So these kind of thing computer will do. Computerized accounting represent a technological advancement in the field of business accounting which allows the users to set up income and expenses account such as rental or sales income, salaries, advertising expense and material cost. So what are the difference between manual or computerized accounting system? The first difference is speed. As you know, human have a limited speed, but machines, computer is an electronic machine, so it can do work so fast. Okay, it is much faster than a human being. Computers are much faster than a human being. You just need to run a data or a code in the system, and it will do or provide you the work with one click. Cost. Manual accounting with paper and pencil is much cheaper than a computerized system. So it is a one way to looking at the cost. It is one way to looking at the cost, but you can also look at this point like that. If you needed to invest one time, you needed to invest one time in computers, and you have to pay each and every month to the accountant or the salary. So it is both costly. Anything, either manual or computerized, can be known as costly or economical. Backups. All transactions can be saved and backed up in case of fire or other mishap. You cannot do this with paper records unless you make copies of all pages, a long and inefficient process. So the difference here is manual accounting and computerized accounting. The definition: ledger accounts. In manual accounting, we check the journal and then we transfer figures to related account, debit or credit side by manually posting it. But in computerized accounting, it is a automatic system. It is a automatic system and the process, and it will make all the accounts ledgers since the voucher entries under its respective ledger account have already been passed. Means you just need to put a entry and other accounts related to that or that transaction will be posted or passed to various accounts, to their related accounts automatically. Same goes with the trial balance. Computerized accounting system will automatically produce the trial balance. Now, advantages and disadvantages of computerized accounting. First, the advantages: automation. Automation, as the calculations are handled by software. Okay, it automatically calculate all the data you provide to the computer. It automatically calculated. Okay, once issued invoices and processed automatically, thus saving time. Like you just posted the transactions in the form of vouchers, and it will create a trial balance out of it. So it is an automatic machine. Accuracy. Accuracy of computerized accounting is much more than the manual accounting, because it's a machine, and it have very less chances to do any mistake in data or posting it. Data access. Using accounting software, it becomes much easier for different individuals to access accounting data outside the office and securely. This is particularly true if an online accounting solution is being used. If an online accounting solution is being used. Easy representation of data in various format. In various format. See, if you are preparing the accounts manually, then you have a limited representation of data. But in computerized accounting system, you just need to click. You are one click away from the representation of the data in various format. With one click, you can see all your data in tabular form, in chart form, in pie chart form, bar graph form, or in any form. So it can provide you easy representation of data in various formats. Reliability. Since the calculations are very accurate, the financial statement prepared by computers are highly reliable, because there are very less chance of mistakes done by the computer. So the accuracy is highly. There are very good chances that the data you prepared through computerized accounting is much reliable than the manual accounting. Scalable. When a company grows, the number of transaction when a company grows, the number of transaction entered into the system increases. As a result of which, the need for accounting not only increase but also becomes more complex. With computerized accounting, everything is kept straightforward, because shifting data using software is easier than shifting through a bunch of papers. It's easy. Speed. As I said earlier, computerized or the computer speed is much faster than the human being. Computer can prepare the data in 1 minute or less than 1 minute or second, but human take time to prepare the accounts. Security. The latest data can be saved and stored in offsite locations, so it is safe from natural and man-made disasters like earthquakes, fires, floods, and terrorist attacks. Cost effective. Since using computerized accounting is more efficient than paper based accounting, then naturally work will be done faster and time will be saved. And it is a one time investment. Disadvantages of computerized accounting. Now we have seen the advantages. Yeah, the first disadvantage is cost of software, because some softwares are so costly. Some softwares are so costly. So the cost of software is a disadvantage, demerit of computerized accounting. In case of computerized accounting, you must buy the software. Some software requires you to purchase or upgrades or update for additional features. You must also ensure your computer is capable of running the software. If you have an outdated computer or outdated software, you cannot run the updated software or the updated accounting software in that computer. Reliance on computers. If your computer crashes or data is corrupted by virus, you won't be able to use your accounting software until the problem is fixed. Until the problem is fixed. This also means you won't have access to any entered data until the computer is running again. Or if somehow your data got deleted, then sometimes it become a it become very problematic. You cannot re-access your data, so it is a real big problem. Fraud. Accounting software data requires extra level of security to prevent fraud and embezzlement. Software make it easier for user to alter data, making fraud easier to accomplish. Human error. While it is easy to write down the numbers incorrectly, it is even easier to mistype a number. Human error can be anywhere, okay? In manual or in computerized accounting as well. It could be anywhere. Training. To use the accounting software, it takes time to accountant. The accountant needs time to learn how to use the accounting software or a particular accounting software. So training is must. Time. Many accountants find that it takes more time to enter data into accounting software than it does to write it or type it into spreadsheet. Due to step-by-step screens process often takes longer, especially for those who do not use the software often or are still new to using the program. Consideration while choosing the accounting software. What point you should consider when you choose the accounting software for your business or for your company. Now, the first thing is the size of business organization. You should choose the accounting software as per the size of your business organization. If if you have two options, if you have two options in software, and one is costly, and one is effective and normal economically, okay, and your organization is not so big, the transactions happen in your organization is not so much, okay, so you can go with the economic software as well. So the size of business organization matters. Ease of use, you should choose the easy software. You should choose the easy software. Features. Before purchasing any accounting software, you should go through the features of that software. What particular software offers is an important consideration. A list of primary things that the business needs to track and the account for should be careful prepared. The business must know how much each service or product cost and be able to track the cost of goods sold. Features like invoicing, online payments, payroll, auto payments, reporting, bank balances will help to stay up to the date on source of business. Protects classified data. Compatibility. and the price. These are some consideration. Accounting softwares in India. These are some accounting software we generally use in India, in Indian business. The first one is Tele ERP9. It's the most popular accounting software. Tele ERP9. Tally ERP9 is a business accounting software for the purpose of accounting inventory and payroll. Tally has one Tally has been one of the dominating accounting software for almost 2 decades. The software has been developed by Tally Solution Private Limited. It is most user friendly for accounting software and thus employers prefer Tally for easy availability of trained professional for this specific software. Almost all accounting activities like inventory, purchase, sales, cost, payroll, and statutory year end process can be easily handled by the Tally. It is the most important software and we generally use the software. Means many business companies or many firms use this software for their day-to-day business activities. Profit books. This is an online accounting software developed for small enterprises. It can only be operated on the internet as it is a cloud based software. The data can be securely placed in a cloud and can be accessed anywhere. Mark. Mark. Accounting software is developed by Mark CompuSoft Private Limited and is well accepted in small and medium enterprises in India. The software is marketed for the last 2 decades in Indian market. Wave. Wave's accounting tool are 100% free, secure and very popular in accounting community. It is one of the best web-based accounting software solution available at present. And same goes with Zero developed by Zero and Reach as well. Now, introduction to Tele ERP. Introduction to Tele ERP. Tele ERP9, developed by Tele Solution Limited, is one of the most popular and widely used business management software available in India and other countries. It can be used by small to large business organization. It is available with two types of licensing system. What are these two types? First one is silver edition mode and second one is gold edition mode. These are two type of licensing system in Tele ERP9. And silver edition mode is for single user and gold edition mode is for unlimited user. It is for single PC. It can be activated online or offline. It can be accessed from the system on which it is installed by only a single user. Means it is installed in a system. Okay, it is installed in a system only. Only a single user can use it. And gold edition mode is for unlimited numbers. Means you can use it from your PC as well and I can use it from my PC as well. It is installed on LAN, means local area network. Generally firms purchase this. Okay, a business or organizations purchase gold edition mode and you and other employees can access can access this software in their organization and use it. Now, how to start? Tele ERP 9. How to start Tele ERP 9. How to start Tele ERP 9. Components of Tele. Wait a minute. Now focus on this image. Focus on this image. This is the image of Tele ERP system, and we will discuss all the things one by one. First, horizontal button bar. This is the top horizontal button bar. This is a collection of buttons that are fixed and provided for quick interaction. This is the bar. This is the bar, and here you will get so many buttons like keyboard and teleshop and other things. Okay, ledgers. So you can go to the ledgers, keyboard, or other stuff with one click. So this is known as top horizontal button bar. All right. The close button. I guess you all are aware with the close button, that cross mark in any software. Okay. This is the close button. Screen name. Screen name. You will see it here. This is screen name. Wait a minute. This is screen name. It shows the name of current screen. It will show the name of current screen, like if you have opened the vouchers or the ledgers, whatever you have opened, it will show the name there. Right pane. This thing is known as right pane. In right pane, menus are displayed like this, and the red letter in each menu represent the shortcut. By pressing that alphabet from the keyboard, one can open the menu. This is the right pane. Okay, and this one is the left pane. It shows the current period, current date, or name of companies with last date of voucher entry done in each company. Vertical panel bar. Vertical panel bar. This is the vertical panel bar. It is used for quick interactions. Quick interactions. Calculator. It can be used for calculation work, and figures can be compounded. And you can use the calculator with a pair of keys like Control plus N. If you press Control plus N on your keyboard, then it will calculate your data. Okay, you can use calculator with that. Or you can simply click on the calculator. Here is the calculator. Information panel. This displays detail of product versions, license, and configuration. Here is the information panel and taskbar. It shows the complete navigation path of current menu or screen selected. Here you can see. Is this clear? This is the view of Tele ERP. If in future you ever use Tele ERP, this will be the format of Tele ERP until it gets updated. Is this clear? Is it? Are you guys even listening? Hello?
Yes, ma'am, I listening.
Okay. Creation of a company. Creation of a company. Creation of a company. See, creating company is the first step toward starting working with Tele ERP. 9. You're not audible.
Yes,
Your voice is cutting.
ma'am.
Hello. Please write it down. Whatever you want to say, please write it down. A company is an organization for which financial records are to be maintained, and therefore it can be called a central repository from where an financial statement or report can be extracted anytime. Okay. A company can be partnership firm or a sole proprietor. Listen it carefully. In Tele ARP, a company can be partnership firm or sole proprietor or a limited liability partnership or governmental, non-governmental organization or a company registered under Companies Act 2013. Mean it could be any company or any organization. Okay. Here, if you are preparing accounts in Tele ERP for a sole proprietorship, then as well it will be shown under the name of company. If you are preparing the accounts for a partnership firm, then as well it will be named under the company. That's why it is known as creation of a company. Okay. Producer of creating a sorry procedure of creating a company. Let's see the procedure. To create a company, click on the create company in company info. Alternatively, one can press Alt plus F3. See, first you need to open the Tele ERP software, and after that, either you can press Alt plus F3 from your keyboard, and it will create a company or a new company which you want to do accounts for. Okay, or you can simply click on this thing, create company in create company in company info. This is the company info part, and under this third section is for the creating a company. It is just like creating a new folder. Once you click create company, the following screen will appear as appeared in figure 18.3 in front of you. See, here it is. See, after creating a company, this screen will appear on your desktop, and you need to fill some information in this. First one is directory. Directory means the name of the company. Directory means the name. It will display the means it's not mean names. Directory means it will display the path where your company data is stored. Directory means it will display the path like Windows C, Windows D of computer. It will say that where your files are being saved for the same. Now, in this part, this is the name part. Here, you will write the name of your company. You will write the name of your company. Primary mailing details. Primary mailing details. In this mailing details, you needed to put mailing address or mailing name. Mailing name means you can specify any other name if you want for mailing purpose. By default, it will always show the name which you have entered in the name field earlier, which you have entered in the name field earlier. Suppose you have entered here Reliance Limited. You have entered here Reliance Limited. If you have put any name in the mailing name, then it will show here other than the Reliance. But if you leave this column empty, then it will show the name Reliance Limited only. Okay, it will copy the name from the name section. And after the mailing area, it will show the address. You needed to provide the address of the company. Country, it is has mentioned here. State, pin code, every single detail should be mentioned here. Now the contact details like phone number, mobile number, fax number, email, and website, everything is provided here. Every single detail about the company will be provided here. And okay, one more important thing. If you do not want to put address, if you do not want to put address of the company, then you can skip this part. You can skip this part. Okay, just you need to just press the enter. And this pin code is mandatory. You needed to provide the pin code. It is mandatory. Now auto backup, company details we have discussed. Security control and base currency information, it should be provided. And after fulfilling all the details, once the details are filled, you press the enter again. Screen will displays a box saying accept yes or no, just like this. Here you can see a yes or no, and you need to put or click on a yes button. Okay, and if you want to change anything or any data, so just press the no and edit here, and then again press enter, and this will show, and press yes then. And after pressing yes, it will take you to the next screen. The screen will show this kind of data on your dashboard. Now, selecting a company. By using select company field, you can open another company from list of companies already existing. Now you have learned how to create a company, but suppose you have 3 to 5 companies already. Now, for selecting a company, and you want to select that company you just created, you needed to click on the Alt plus F3, and Alt plus F3 will show this kind of data, and out of this you needed to choose the select company thing. The select company thing. And after pressing the select company, you will be shown the data of all companies like this. These are the different companies you are preparing data for, and out of which, suppose you want to open this third number of company, just click on it and press yes, or just do a left click of your mouse. Now, alteration detail of a company, deletion of the company, deletion of the company. You can just press for the deleting. If you want to delete a company, just press Alt plus D. Just press Alt plus D, and the company you have created will be easily deleted from your Tele ERP software. And for shutting off a company, you needed to press F1, either H or Alt plus F1. I guess it is clear.
Yes, ma.
Now, features and configuration. Once you have created a company, it is now time to set features and configuration as per the requirements. Features will affect only the company in which they are enabled, yes or no. Whereas configuration will have an effect on all companies in the directory data. Means if you are adding or deleting any feature from a company, then that will affect only that company, only that specific company. But if you are adding or deleting something from configuration, it will affect the whole system. It will affect the whole system, means it will affect the all the companies, all the companies which are listed in your software. Features are the set of capabilities which are provided as option which will enable you to set and maintain your record for financial statement as per your need. It can be found by clicking features on vertical button bar on right pane. Alternatively, you can press F11 and feature screen will appear as follows as in figure. You can see it here. I don't think so. It is clearly written here. It is a little blurry, I guess. This is transaction. This is report. I don't know what it is written. And it is written, I guess, masters. Yes, the masters. Accounting info, inventory info. Let me show directly take you to the features. See, company feature after you select accounting features, here it is mentioned in here accounting info. You just need to go to the gateway of Tally and click on the accounting info. After clicking on the accounting info, you will get this kind of portal, and here you need to click on the accounting features. After clicking the accounting feature, you will get this kind of format. These are the accounting features. Some are general features, some are managements, invoicing features, booking features, budgets and scenario management features, and some other features. You need to put a yes or no for each and every feature. Whatever feature you want in your software, just put a right on that. And if you do not want any feature, click on it, and it will be deleted from that feature, from that company, specific company. Okay. Accounting features. See, wait a minute. Let me show you where the accounting features are listed. These all are accounting features. Okay, these are the part of accounting features. And the first part of accounting feature is general. Outstanding management, cost profit centers management, invoicing relating features, budgeting and scenario management, banking features, and other features. Now, outstanding management. Straight going to the outstanding management. This will help maintain bill wise detail and also calculate the interest on outstanding. Cost or profit centers management, it will help in maintaining the payroll and cost centers. Invoicing, to enable recording purchase in invoice mode, type yes. To record sales and purchase return, debit and credit note is used. Set debit and credit note as yes. And if you do not want invoicing, then set a no in the debit and credit note section. But generally they are required, so always keep a yes in this section. I know it is a little difficult to understand the computerized accounting in this theoretical format, from this theoretical format. But what can we do? Banking features, to enable check printing or enable check option, then put a yes in front of the check printing system and other things like this. If you have chosen the inventory info, after choosing the inventory info, the section inventory features will be shown to you, and after clicking on the inventory features, these kind of things will be shown to you. And similarly, you needed to put a yes or no in front of required things. As I said earlier, configuration will affect all the companies. It will affect all the companies, means whatever thing yes or no you are putting in any kind of accounting or information, you are just doing it for all the companies. You are just doing it for all the companies. So that's the only difference. Now, shutting tally ERP9, you can just click Control plus Q, and the Tally ARP9 will shut easily without any confirmation. And if you click the escape button or Control plus M, it will ask your permission. It will ask the confirmation. So you needed to put a yes in the confirmation, and that's it. That's it. Now, creating masters. Unit number 19, creating masters. A chart of accounts is a list that depicts the account that a business used to store and record transaction in its books of accounts. Tally ERP9 divides chart of accounts into two, like ledgers and groups. Listen it carefully. Tally ERP9 divides chart of accounts into two things, ledger or groups. In manual accounting process, ledger are creating a next step after recording the journal entries, but in computerized accounting, ledger creation is done before the journal entries because you need ledger to debit or credit while doing journal entries. In this unit, you will learn how ledgers and groups account are created, how data related to stocks, inventories can be maintained, and the way to delete or alter and display any ledger or group. Now, ledger and groups. Ledger is a T-shaped account. Like purchase account head will be known as purchase ledger. Okay, sales account head will be known as sales ledger. Okay, by default, Tally has two predefined ledgers. By default, Tally has two predefined ledgers. First one is cash and second one is profit and loss account. Cash and profit and loss account. To view already predefined ledger, go to the gateway of Tally, accounting info, and ledgers, multiple ledgers, and display the screen will appear as follows. This kind of screen will be presented to you if you follow the earlier steps. Now, groups. See, a group is the accounting group which consists of ledger accounts of similar nature. For example, bank account group will have all bank accounts classified under it. Tally has 198 predefined groups, out of which 15 are main primary groups and remaining 13 are subgroups. Out of 15 primary groups, 9 are related to balance sheet items and remaining 6 are profit and loss related items. all all 28 predefined groups by going to gateway of Tally, account info, groups, multiple groups, and the display. Here you can see it. You just needed to go to the gateway of Tally. In this, after gateway of Tally, you need to choose accounting info, and after accounts info there is a section named groups. You needed to click on that. After groups there is a section of multiple group. Click on that, and after clicking on that you will get this kind of display. These are some primary groups. These are some primary groups, and the remainings are subgroups. Ledger creation. Single ledger creation. How do you create a ledger? Go to the accounts info in masters in gateway of Tally. Then click ledgers. Then click single ledger create. Then type Surbhi capital account in name. Select under capital account. Enter 5 lakh in opening balance on 1st April 1917. Here we have created a ledger. We have created a ledger with this information. With this information. Now we have a ledger for building as well. Let's see how we will create a ledger for this building. It is a ledger building. Group is fixed asset and the amount is 19 lakh in Surbi capital account only. Creating building account. Go to the accounts info means the same process still here. Okay, type the building account. After clicking on the single ledger create, just type the building account in name and select the fixed asset account. Select the fixed asset account under it and enter this 2 lakh amount in opening balance. In opening balance. Multiple ledgers creation. It is the same process you just need to follow, but instead of clicking the single ledger, you just need to click the multiple ledgers. That's it. And these kind of screen will be presented to you. These are the list of multiple ledgers. Altering and displaying ledger. Alteration of ledger is the process by which you can alter or edit any ledger, say for spelling mistake, wrong selection of groups, altering balance of ledgers, and something like this. To change the building account ledger name as land and building. Suppose you have written it the building account and now you want to change that building account into land and building account. Means you needed to add the land in this building account. For this, you needed to follow the same process till single ledger alter. The same process, go to the gateway of tally, click ledgers, then in subsection click single ledgers alter. Now selecting the building account from the list of ledger, this as it is mentioned here, this. Okay, after selecting it, change building account to land and building account. Change it land and building account. That's it. Now, for deleting the ledger, you needed to follow the same process. And after selecting the single ledger alter, select the building account from the list of ledger. Press Alt plus D, and press Y or accept yes with the help of mouse. That's it. That's how you can delete the ledger. Now we have seen the ledger creation and now we are here for the group creation. Although Tally has some predefined groups, but if you wish to create new group to meet your specific business requirement, then you can create a new group as well. Now, masters in gateway of Tally, you just need to go to the masters in gateway of Tally. Click groups. Now click single group create. Type creditors is in name. Here the information is given. Okay, after that, select under means sundry creditors. We needed to create sundry creditors. Enter the number. Enter number to all other fields. Each and every field like east, west, every field. And press yes to accept it. Inventory masters creation. Like stock items, stock groups, stock categories, unit of measures, go downs location, everything can be put it in the inventory masters creation. That's how the information looks like. These are the example of stock group creation, and it will follow the same process. I don't think so I need to repeat the same process again and again. And the same way, with the same process, you can delete the inventory masters as well. Now, Unit 20 is about voucher entries and invoicing. Voucher entries, now you have learned about creating the ledgers and groups and editing them. Now we have reached to the point where we can learn about the voucher entries and invoicing. See, voucher is a document which is a proof of a transaction. We have discussed it in the first unit of our subject, like sales receipt, cash memo, and bank interest statement, and etc. Voucher is used to enter the transaction, or it is a proof that this transaction, particular transaction which you have mentioned or put it into the system, have happened in real life. So it is a proof. And for the voucher entry, this is the screen of voucher entry. Voucher number, voucher name, date and day, everything is mentioned in this voucher. See, types of vouchers: contra voucher, payment voucher, receipt voucher, journal voucher, sales voucher. These are the 10 types of voucher. They are predefined, and you will get these voucher with the Tally ERP 9. And by pressing these number like F4, F5, F6, you can open the respective vouchers. You can directly go to the respective vouchers. Creation of vouchers and recording entries like contra vouchers, F4. Contra vouchers is used for to record transaction of funds transfer from bank to cash account. Okay, cash to bank account. Sometimes we need money in the form of cash, so we withdraw the money through ATM and use it directly from there for our business activities. And this kind of entry will show a journal entry which involves bank to cash. Means if you are withdrawing the money from your bank for your business use, then the entry for the same will be cash account debit to bank account, cash account debit to bank account. In this case, bank is decreasing and cash is increasing, and it involves both the things, cash and bank to cash. Or if you are depositing cash to your bank, it will increase your bank and decrease the cash of the firm. The entry for the same would be like bank account debit to cash account. So these are the type of entry which we known as contra vouchers. Here we have an example. Surbhi Limited deposited cash rupees 10,000 into PNB Bank. So PNB bank account debit to cash account. Two things are involved. And to create a contra voucher, it will be shown in the contra voucher. To create a voucher, you needed to go to the accounting voucher in the transaction in gateway of Tally. After going there, you need to click on the vertical bar, go to the F4 or contra, or directly press F4. Contra voucher will open with serial number 1. Put the date of transaction when this transaction has happened. Now, credit will be on display already. Select the cash account from the list of ledger account. Select the cash account from the list of ledger account. Enter the amount 10,000. Similarly, debit will display on the select PNB account and enter the amount 10,000 and press enter. That's how it would look like. Are you seeing it clearly?
Yes, ma'am.
See, you needed to put the amount here. PNB account debit and cash account is credited here. Now you needed to put any detail in any voucher. The process is same. Somehow the process is same, but you needed to know about the different vouchers. Payment vouchers means if you are paying for anything, you have purchased the building, you have paid for it, okay, by using cash or bank. If you have made any kind of payment for purchasing, then it is known as the payment voucher, and the process will be followed here. The same process will be followed here too, to create payment vouchers. And you can directly go to the payment voucher with F5. Okay, after the payment voucher, the receipt voucher. Just wait a minute. Just hold a second. Yes. Where were we? The receipt voucher. So, receipt voucher is all about the money you receive against any transaction. Like if you have done sales, you will be receiving cash. If you have sold any fixed asset, you will get the money. For that, you needed to open a receipt voucher and put the entry in receipt voucher. Here is an example. Surbhi Limited received rupees 5,000 by check from Suresh Electrical Fittings Limited. Means cash account debit. It is a check. So to bank account debit to Suresh Electrical Fitting Limited, and this will be passed same in the vouchers. Okay, you can open the receipt voucher by simply clicking the F6. Journal voucher. Journal voucher, like the journal proper. What we used to do in journal proper, we used to pass those entries which doesn't fit in purchasing account, sales account, or cash account. Those entries which do not fit in cash account, sales accounts, sales return, purchase return, this kind of account, and have a effect on our business, those entries we would like to pass in the proper journal proper in subsidiary books. If you remember, same goes with the journal voucher. The entry which doesn't fit any other voucher, which doesn't fit in any other voucher, should be passed in journal voucher. Means F7. The key F7 is for journal voucher. Okay, the process is same for journal voucher as well. Sales voucher, all the entries related to the sales should be put it in the sales voucher or sales invoice. Credit note voucher means control plus F8. Means if any sold goods, means if there are any sales return, if there is any sales return, and you have vouchers for that, in that case you need to open or put the entry in the credit note voucher. It is for the sales return. It is for the sales return. Now purchase voucher, all the transaction you are doing or all the purchasing you are doing on credit base should be mentioned under the purchase voucher. Their proof should be mentioned under the purchase voucher or purchase invoice. And you can open the purchase invoice with the help of key F9. And debit note voucher, see, as the credit note voucher is for the sales return, debit note voucher is for the purchase return. For the purchase return. Okay. Memo voucher. Memo voucher. So, some accounting vouchers which do not affect the books of account, you need to put those vouchers under the name of memo voucher. And with the combination of these keys, these two keys, you can open the memo voucher, control plus F10, and that's it. Now, suppose with all these predefined payment vouchers or the vouchers you get with the tele ERP9, you want to open any other voucher, you want to open any or create any other voucher, then in that case you just need to go to the gateway of tele, click Click the voucher types. Now click create. Click create. After clicking the create, the screen will open and you need to put the name of the vouchers such as like petty voucher, petty voucher class. Okay. Select select type of voucher, payment, and under abbreviation, payment will come automatically in this voucher. Select method of vouching numbering as automatic. Set allow narration in voucher and yes, and skip print voucher after saving or no. That's it. That's how you create a voucher or new type of voucher. Same thing goes with the invoices. You can create some invoice as well. That's it, I guess. This is the last unit of this block. Preparation of reports. Preparation of reports. And after that, we will continue our class.
Okay, ma'am.
Okay. Preparation of reports. After doing all the things you need to prepare the reports as well. Reports means the financial statement, balance sheet, profit and loss account, and cash flow statement. And in this computerized accounting, they will be created by the machine only. Okay, with one click. This is the balance sheet of Surbhi Limited. Asset side, liability side, all the things are shown here. And here you will show, it will depict you the total of your firm, means the balance, the liability total, and this side is the asset total. That's how a financial balance sheet looks like, accounting balance sheet. Okay, these are the fixed assets, current assets, capital account, loans, current liabilities, profit and loss, all these things. Now in profit and loss account, you can view the profit and loss account on gateway of tally under reports. Under reports. Alternatively, if you have set use separate menu for final account statement as yes in general configuration, if you have set yes in general configuration, then you can find P&L account in final accounts. In final accounts, okay, it will create, the system will create all these final accounts by their own. This is the profit and loss. It will have everything, giving you a clear view. This is the debit side and this one is the closing side. As you can see, everything is mentioned here clearly. Opening stock, okay, the bulb and tube light, and purchases account. Okay, this is the trading account in starting. Okay, now indirect expenses, electricity, office cost, stationery, printing and stationery, and environment, other expenses, and other things. And in the credit side, you can see the sales account, okay, the sales you have made, closing stocks, direct income, indirect income, and everything you have learned about profit and loss account. This is the same format. It will follow the same format. Trial balance. Trial balance. It is also similar to the manually trial balance. You can also see the trial balance under the same gateway of tally. Under reports, ratio analysis, you can see everything, every final account, cash flow statement, ratio analysis, everything with one click. Purchase and sales register, cash and bank books, statement of accounts, everything will with a single click. Just click on the report and get your data, get your accounts prepared. That's it. It's complete with this topic. This block or this subject has been completed with this topic. If you have any doubt, please ask in the chat section. I will wait for at least 5 minutes for your query, and after that I will continue your class. We will start the management class. Okay, after 5 minutes we will start the management class.
Okay, ma.
Okay, until then you
O-
can mention any query. Otherwise, after 5 minutes we will start the management class, last session of management as well.
Actually, we are concluding all the classes today on all courses.
Sorry.
This is the, we are concluding all the classes for all courses,
This is the final class for financial accounting.
and
Okay.
also for for the remaining courses. As in, this is the last day.
It I am taking this as an extra class, okay? Because I have stated it very clear to you guys that I would be having a class on Saturday. Means I guess
Yes,
on
yes.
11th, and you guys didn't show up. You guys didn't show up on Thursday class as
Mm,
well, and I have recorded that class. Okay,
okay, so
and for the next
you are not
Saturday
in the
I
class.
skipped the class for you guys so that you can have the access to the study.
Okay,
That's why I
okay, ma.
skipped on Saturday, and
Okay,
today
I
will be the
understand.
last class for management. Am I clear?
Okay, yes, ma.
Okay,
Thank you.
and please inform this to other student as well if you haven't informed others.
Yeah, I've informed them in the group.
Yeah, this was the last class for the financial accounting, and now we will be having the last class for management as well.
Okay, ma.
We will complete the syllabus of management as well.
Okay, thank you.
Oh, all right. And till then you can ask your queries. As I stated, in 5 minutes we will starting the session for management. Please write your queries in chat section. Okay, I guess there are no query in the row. Now I'm removing this book from the presentation and adding the book of business organization and management. Okay. Yes, business organization and management. And now I am giving you rest for the next 5 minutes, and after the 5 minutes, we will be continuing this class. All right,
All
take
right,
a
ma'am.
5 minute rest.
All right, thank you.
Okay, before starting this class, let me take attendance for the previous class. Please turn on your cameras. Please turn on your cameras, everyone. The rest ones. Alright, I'm taking your attendance. Wait. Alright, it's done. You can turn off your cameras. Okay, the break time is up. Now we will start this session. The first unit of this block is marketing management. Marketing management. Before going to the management, first we will learn about the market or marketing. So, according to the definition, marketing is the activity, set of institution and a process of creating, communicating, delivering and exchanging offerings that have value for customers, client, partners and society at large. Society at large. Okay, we'll see one more definition. First, this is like this definition is given by Philip Kotler, a human activity directed at satisfying needs and wants through exchange process. Through exchange process is known as marketing. And with some of definitions, we can conclude that marketing is a holistic process. In this process, the organization make effort to engage customers. Creating or producing the product is nothing if you are not able to sell your products to the customers, and exchanging the goods and the cash, exchanging the goods and services with your customers is known as marketing. The organization make efforts to develop strong customers relationship. The customer value is created here. Okay, the company takes back the value from the customers in terms of revenue and profit. Company will provide the products or goods and services to the customer, and in exchange of that, customer will provide profit or revenue to the company. That's what a marketing is. So, based on the above discussion, we can develop a process oriented definition of marketing. Read it from here. Marketing is the process of ascertaining consumer needs, converting them into products or service, and moving the product or service to the final consumer or user to satisfy certain needs and wants to specific consumer segment or segment with emphasis on profitability, ensuring the optimum use of the resources available to the organization. That's what a marketing is. All right. Exchanging the goods and services with the customers is known as market. Now, we have some marketing concepts. We have 5 marketing concepts. These are important. Listen to them very carefully. First marketing concept which we got is introduced with, this is the first marketing concept, production concept. Production concept. What this concept says, like This concept says like you do the production, more the sales. Being a producer, think like a producer. Being a producer, and if a producer follow this production concept, then he or she will produce goods more and more, more and more, more and more, and he will provide he will provide the goods in the market very easily to the customers. So this is the production concept. In this, the mental statement of the producer is like that: if he or she will produce more, the goods will be seen in the market more, and consumer will automatically purchase their good. If they will be seen in the market, consumer will grab those goods. That's it. That's the production concept in general. Now we will read about it. A company. A company which believes in this approach concentrates on achieving high production efficiency and wide distribution coverage. Means they want to be seen in the market. And organization may adopt this concept in two types of situation. When the demand for the product is higher than the supply, when the demand for the product is higher than the supply, you can sell more if you increase the production. You can sell more if you increase the production. Here, the main concern of management is to find ways to increase the production to bridge the demand and supply gap. Now, the second situation you can opt this concept is when the cost of the product is high. When the cost of a single product is high, and increase in production is going to bring down the cost due to economies of scale. Economies of scale. If you produce more goods in a particular day, suppose if you produce 100 units of a good in a particular day, and the cost for each good comes 10 rupees. Now it is a high cost for the product according to you, and you want to reduce those cost. You want to reduce that cost, then you can increase the production, produced at least 150 or 200 units in a day. Okay, the next day you have produced 200 units of goods in a day, and for that particular day the cost of the good have become less, like 5 rupees for each good. So that's how increasing the production reduces the cost of good. Okay, so in these two cases you can use the production concept. This is all about the production concept. In this production concept, producer think like if they produce more goods, then they can sell more goods, because their good would be available in the market all the time. That's their thinking. Now, after the production concept, after the production concept, we get the product concept. We get the product concept. In product concept, the thinking of producer, in product concept, the thinking of producer is to improve the quality, performance, and features of their product. Means now they are focusing. Now, being a producer, the producer focus on the quality of their product, performance of their product, features of their product. They want to increase. They want to increase the features of their product. Okay, this is what product concept is all about. According to this concept, they think, the producer think, if their goods or product are of good quality, then the customer will buy their good, even at a higher rate, even at a higher cost. That's what product concept producers think like. Now we will read about it. The product concept implies that consumers favor those products that offer the most quality, performance, and feature. They also believe that consumers appreciate quality features and will be willing to pay higher price for the extra quality in the product or service made available. Okay? They follow this kind of mentality. Is it all right? we are moving to the selling concept. Let Before moving to the selling concept, let's go for an example for the product concept. A biscuit
Okay.
manufacturer produced A biscuit manufacturer produced a new brand of biscuits with good ingredients, colors, and packaging, etc., without taking into account consumer taste and preference. This may fail in the market if the biscuit doesn't taste good to the ultimate consumer. They have changed their philosophy here. They have changed in the ingredients, color, packaging, but it product concept says your quality should always be increased. Okay, the quality of the taste, either taste or the product, should always be increased. That's the reason this concept stands. It says if the quality increases, then only the customer will be able to pay you a higher price. If you fail at taste and preferences, then you can fail at the sales of the newly or qualitated product. Now coming to the selling concept. After the product concept, selling concept hit the market. Okay. In this, in this, producer think like if they do more and more promotions, more advertisement of their product, their sales will increase. Their sales will increase. Okay, they do not consider the quality of their product, they do not consider the production. They just say if their product are seen in market, then the customer will buy it, and for that purpose they use promotion, advertisement, okay, samples and other things. They put effort on showing the things to the customers. That's it. Selling concept, let's read about it. Start it from here. The selling concept. The selling concept assumes that consumers on their own will not buy enough of the organization products unless the organization undertake aggressive sales and promotional efforts. Aggressive sales and promotional efforts. Many insurance agents, salesperson of certain electrical gadgets, health drinks and soft drinks, and fundraisers for social or religious causes come under this category. You have seen ad for many products. Sometimes you see ad of a single product 10 times, 50 times, 60 times a day. And it is the human psychology. The product image will be set it in your mind through phone, through internet, laptop, tv ads, and everything, youtube ads and everything. And that's how, whenever you see that product in the market, you will be willing to purchase that product. That's what selling concept is all about. All right. Now next is marketing concept. Next is marketing concept. Now this is the best concept. This one is the best concept among all the marketing concept. The fourth one is the marketing concept. Here the producer take the consideration of consumer only, means he or she will think about the consumer only. They will try to understand the needs and wants of the consumer and will try to improvise their product accordingly and improvise their service accordingly. Consumer is considered as the king of the market, and they are following this concept here. Marketing concept is following consumer is a king concept here. The organization consider needs and wants of the consumer as the guiding spirit and delivery of such goods and services which can satisfy the consumer needs more efficiently and effectively than the competitors. It is also said that the marketing concept in consumer orientation with the objective of achieving long run profits. Long run profits. And consumer is considered the boss or the king who dictates of the market. So you need in this producer follows the consumer only. They understand the consumer with the help of feedbacks and other things, reviews they get. Okay. After marketing concept, there come the societal concept. The societal concept. And in this societal concept, in this societal concept, growing awareness like now the producer want to think about their society as well. Producer want to think about the society as well. They want to do the welfare to the society. Okay, and if they are considering the society, then if the producer considering the society means if they are donating something to the society and doing something good for the welfare of society, then this producer comes under the societal concept. They understand the societal concept. If they do not harm our environment, our nature, by producing chemicals and other things, then it is also known as societal concept. All right. Am I clear till here?
Yes, ma.
Okay, please tell me if you had any other class.
No, we are not having any class.
Generally,
We've concluded all the
generally on.
classes.
Wait.
Yes,
Generally
generally
on.
speaking, we've concluded all the classes.
No. Okay. Wait a minute then.
Okay. So,
Okay. So after the societal concept, now the evolution of market. As we have discussed, the concept they have evolved with the same thing. Like first we got the production concept in the market. After the production concept, we got introduced with the product concept during the 1900 and 1920, and during 1920 to 1950 we got introduced with selling concept. 1950 to 1970 the marketing concept, and 1970 to present time We are in the societal concept, means now the producer thinks about the society as well. You can see with this evolution, at first producer thinking, these are the evolution of producers thinking. At first producer used to think like if they produce more they can sell more. After during 1990 and to 1920, the producers start thinking if they increase the quality of their product they will sell more, okay, they will get more profit. During 1920 to 50, the producers start thinking like if they want to sell more then they needed to do the promotions like advertisement, okay. And 1950 to 70, they got introduced with the marketing concept in which they start thinking like that customer is the god of the market, customer is the king of the market, and they need to consider the customer only. Okay, and 1970 to the present time, we get the societal concept. We get the societal concept means now producer thinks about the environment as well. They think they are earning from the environment and the society. They need to do something for the society as well because they are earning in the society for the society. This is how we have involved with all these concepts. Is it clear?
Yes, it's clear.
Okay. Hello. Okay, sir. Hello, students. I am here with an information for you guys.
Yes, ma.
Please tell me which class used to happen after this class, this financial accounting, generally on Monday. You guys were having two class on
In,
Monday, or
income
am I
tax,
right?
ma.
Income tax
We
Income
have
tax.
class.
income
Correct.
tax.
Okay, 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 okay. There's one
You
class
said
left for
we did
income tax as well by
Again.
Tarun sir. Please listen to
uh,
me. I'm saying
Yes,
something.
Yes, yes, by
there's one,
Tarun.
Okay.
but I think he
One class.
communicated it on the 28th.
I am saying, please turn off your mics first. All right. Now, what I was saying, there's one class left of your income tax subject, which was taken by Tarun sir, and you will be having that class on Tuesday, means next Tuesday, means tomorrow. Okay,
Okay,
means the
understand.
21st
all right, ma.
November.
Okay,
On the same time,
okay,
5
ma.
to 7. On the same time, 5 to
Okay,
7, which you
all
used
Okay.
right.
to take the class, okay, you need to present there. And I guess you have an group with Tarun sir. He will inform you
Yeah,
guys
yeah.
too.
We have it.
Yes, he will inform us through the WhatsApp group.
Okay, okay, okay. He will inform.
Yes,
All
last
right.
week it was Diwali holiday.
Yeah. So yes, where were we? Let's continue our class. Difference between selling and marketing. Now you have learned about marketing a lot. We will see the difference between selling and marketing. See, selling emphasis is on the product. Say, what is the meaning of selling? Means you want to sell your product only. So selling emphasis on the product only, but marketing, as you have learned it in the marketing concept, we consider consumer as the god. Okay, whatever consumer wants, we provide it in the marketing concept. So marketing emphasizes on the consumers or customers want. Selling, companies first makes the product and then figures out how to sell. In selling, companies first makes the product and then figure out how to sell. But in marketing, company first determines the consumer's want and then prepare a product according to the consumer wants, which can satisfy the consumer needs and wants. This is the difference between selling and marketing. Now, management is sales volume oriented. In selling, the management is sales volume oriented. But in marketing, the management is profit oriented. Management is profit oriented. In selling, it stresses need of seller. Okay, it stresses on the need of seller. But in marketing, if we talk about it, stresses on the wants of buyer or the consumer, whatever our consumer want. In selling, planning is short run oriented in terms of today's product and market. And in marketing, planning is long run oriented in terms of new products, tomorrow's market, and future growth. And future growth. Importance of marketing. Importance of marketing. After the difference, we are here on the importance of marketing. See, marketing is considered the most important activity of the business in present day, because without marketing, it is not possible to sell the products. Marketing is important to business organizations since it is the activity that sells the product and brings revenue to the company, and it is also the key to its success. It is also the key to its success. All right. Second point, marketing enables the consumers to exercise choice and to improve their levels of consumption. Okay, in sense, marketing is defined as the delivery of a standard of living. If products are not there, then how can we improve our standard of living? How can we do this session if the product, if the laptop was not there, if the internet was not there? So it makes marketing makes the delivery of standard of living. Marketing creates time, place, and possession utilities to products and the services. Marketing contributes to the economic development of the country. It symbolizes the economic development of a country. The economic development of a country. This is because, on the one hand, marketing activities generate employment and income. On the other hand, the development of a country is reflected in variety and volume of goods available and consumed by the people of the country. Marketing offers career opportunity to large number of people. So that's all about marketing importance. Now, marketing in a developing economy. We have different types of economy, like a developing economy or developed economy. What a developed economy means, if a country have all the advantages and have up to date technology and have a good economy, then that thing or that country is considered as a developed economy. But if a country is developing, is it in their developing stage, they are not fully developed, means all the people of that country is not fully developed in their economy, but they are eventually or gradually increasing or developing day by day, that economy or country should be considered as a developing economy. India is also known as a developing economy country. Okay. So the marketing in a developing economy is like most of the markets remain market. Most of the markets remains sellers market. The seller in a dominating position can influence the pattern of consumption, price and quality of goods and services to his advantages. Many of the manufacturers may believe in the selling concept and bother less about the consumer satisfaction. So, in developing economy or in developing countries, the seller or the seller or producer believe in the selling concept. In the selling concept, they doesn't consider the consumers satisfaction. The variety of goods and services available are limited and even their quality may require improvement. Okay. In developing economy, due to lower per capita income, people spend most of their income on necessities and little money is available for discretionary spending. People may not be able to buy many goods and services within the limited income. Okay, as income determines consumption's pattern. Income determines the consumption patterns. The scope for marketing is also determined by the income because consumer can buy according to their pocket now. That's why, and their pocket allows what their income is. So this happens in developing economy. The consumer's knowledge and awareness about their rights is also limited because they do not have more exposure to the marketing activities. They are not aware of their rights. Okay. Concept of marketing mix. Concept of marketing mix. See, marketing requires several activities to be done. To begin with, a company chooses to enter into one or more segment of a market since it may not be possible to cover the entire market. The manufacturer of a bathing soap, for example, might aim at the working class in the middle or lower income group as his target consumers. Once the target market is decided, the product is positioned in the market by providing the appropriate product quality, price distribution, and other things. So basically, marketing mix is a complete package for a product, and it includes four functions or four p's of or four elements. These four elements are considered as four p's of the marketing mix, and these are product, price, promotion, and physical distribution. So, marketing mix says that we divide the marketing activities into these four basic elements: product, price, promotion, and physical distribution. That's what we call marketing mix. Now, we will read about one by one. The word product, start with the product. The word product stand for the goods and services offered by the organization. Goods and services offered by the organization. Once the needs are identified, once the needs are identified, it is necessary to plan the product, and after that keep on analyzing whether the product is still satisfy the need which were originally planned for, and if not, to determine the necessary changes we needed to done in that product. So first we need to identify the need of that product in the consumers, the want or the expectations from the product, from the customers, and we create the product in this product element. We offer the product, goods or services to the consumer. Now, the point price. Second point is price. Price is money that consumer has to pay for that goods or services. The product we have produced, the product we are planning to produce, and now we need to set the price for the same. Now we need to set the price for the same. Price must be considered as worth the value of the product, worth the value of the product, to become an effective marketing tool, to become an effective marketing tool. The product has to be reasonably priced. Your product price should not be overpriced or underpriced. Okay, the manufacturer has to take into account cost factors, profit margins, the possibility of sales at different price levels,
Ba buɗewa
and
nake
the concept
ba
of
buɗewa nake ba,
right
kar ka
price.
damu malam. Kawai na sa kaina ne
Please,
a jiki. Malam ya ne?
please turn off your
Ya
mic.
gajiya? Ya yau? Bilin ka fa? Ɗauko mana shi kawai ka sa mana shi.
Promotion. Promotion. After the deciding the price, promotion. This activity, this promotion, this P involves the activity in which you promote your product. You promote your product for the sales. You target your audience in this step. Okay, it include selling through the advertisement, sales force, and by providing discount, samples, and other things. Okay, promotion can be done through special seasonal discounts, competition, special price reduction, and etc. thing. Or you can simply advertise for your product. After the promotion, you need to do the physical distribution. Physical distribution means the channel you follow, channel of distribution you follow. Okay, the producer to wholesaler, wholesaler to retailer, retailer to customers. Okay, you need to follow the physical distribution, means you need to provide your product to the retailer. So that's physical distributions refers to the aspect of channel of distribution through which the part has to move before it reaches the consumer. Mhm. Here, this image depicts the marketing mix. See, the first thing is product. Product involves the activities of introduction of new product, improve if you have an existing product, then you need to improve your product, the quality of your product, then elimination of marginal or non profitable product. Okay, packaging of your product, branding, everything related to the product is mentioned here. Okay, the production. Now, after the product production, you need to put a price, means you need to set a MRP of your product. Okay, by adding the profit margins, by seeing the cost of your product, and sales at different prices. Right price means the reasonable price you need to set for your product. After pricing, you go to the promotion, like you advertise, you sales for sales force selling, sales promotion, you do everything in this promotion category. Now after the promotion and all, you do logistics of distribution channel, warehouse, insurance and transportation, everything means now you will supply your product to the retailers. Okay, this is known as physical distribution. Every activity related to the supply of your product is come under the physical distribution. That's it. That is what marketing mix is. Okay, moving further. Now, concept of product life cycle. Concept of product life cycle. This is the first thing in marketing mix, the product. Now we will learn about the product life cycle. Product life cycle is about introduction, then the product grows, then it comes to its maturity, and then decline or obsolescence. Decline or obsolescence. We will understand it with the help of this graph. See, the x-axis shows the time and the y-axis shows the sales and profit about the product. Now, think about a product. Okay, think about a product. I'm taking an example of an outdated car. Outdated car. You can think of any car of any company. So just think like that. In the start, when the company have produced a car, okay, car A, I am giving the name to this car A. A company producing a product, car A, okay, they are introducing this car to the market, to the market. Now, when companies start producing it, suppose it is a car of Maruti company. It is a car of Maruti company. Then it is in the introductionary stage. When you introduce it to the market, to the new market, when you introduce your new car you have produced to the new market, okay, it will its sale will eventually increase. Okay, slightly increase. People start buying it, start reviewing it. It is the initial stage. That's how any product will grow. That's how any product will grow. So at a stage when there are positive reviews about that product, positive reviews people are getting by using this car, other other customers are attracted towards it, and their sales will increase. The car sale will increase. In this scenario, in this section, the car sales will increase. Okay, increase with a decreasing order, increasing order, increasing with a increasing order. Now, after some time, after 5 to 10 years, suppose, after 5 years, when new cars are here in the market, when new cars here in the market, but somehow people are buying this car too, but means the sales of car here is increasing but with a decreasing rate, means increasing or decreasing rate means here people are buying it, till here people are buying it, like 100 people are buying it in a month, are buying this car in a month. Now after 5 years, only 50 people or 20 people are buying this car in a month. So means the sales is increasing, sales is happening, but with a decreasing rate. All right, after a time there will be a time when the car or the product reaches to its maturity, reaches to its maturity means this is the peak point, this is the peak point of that car. Okay, here the sales of the car will stop. Means no one is buying here. This is the maturity period, and after that, after 15 years of the introduction of that car, it will start declining. It will start declining because there is no need. This car have become outdated, and we have different new car with new technologies in the market, with the present technologies in the market, and this will start decline, and it will start decline and decline. Means the sales will stop and profit will stop. And in this stage, when the product or any product start decline, we should we should take the product from the market. That's how a product life cycle looks like. At first, this is the introduction stage of the product. Then it will grow, means people will like it and buy it for their personal use. And there will be a time when this product will mature, and after some time, the sales start declining. Means people will skipping or going out of that product or choosing another supplement of that product. All right, instead of that product. That's how a product life cycle looks like. Now I don't think so we need to do this explanation. I have explained it much. Basics of pricing. Basics of pricing. After the product, we have come to the pricing. Pricing means we need to put a MRP of our product or our services, and we can determine the price of our product with these three approaches. First one is cost oriented pricing, second one is demand oriented pricing, and third one is competition oriented pricing. These are three methods of pricing: cost oriented, demand oriented, and competition oriented. First, going with the cost oriented pricing. Cost oriented pricing. When the selling price is determined based on the total product cost and a specified margin of profit, that approach is known as cost oriented approach of pricing. You understanding the meaning? Means when you are determining the pricing, you consider total product cost, total product cost, and put a margin of profit on that amount, and that thing is known as cost oriented pricing. Means you have created a product. Suppose you have created a product, and the cost of that one product is 10 rupees. The cost of that one product is 10 bucks. Now you wanted to add your profit margin. You have set it 2 rupees or 2 bucks at as a profit margin. Now you add 2 bucks into 10, 2 bucks into 10, the amount, the cost or the MRP you get is, the MRP you get is MR 12 rupees or 12 bucks. Cost plus pricing. Cost oriented pricing also have two types of method: cost pricing, cost plus pricing plus target projecting pricing. First, going with the cost plus pricing. Cost plus pricing. Now read. Some firms set the selling price of their product by aggregating by aggregating all the cost of the product, including the manufacturing cost, distribution, and marketing cost. Distribution as well as the marketing cost. Means if they have paid for the advertisement, they will add that amount as well in your product cost. plus a determined margin of profit. The cost plus pricing method has been explained in the following illustration. Here we are getting the illustration. Total manufacturing cost rupees 30. Okay. Selling and promotional cost is rupees 4. We will add this. Distribution and administrative cost is 6 rupees. Now we get the total cost is 30 plus 4 plus 6 is 40 rupees. 40 rupees. Now we have set it a margin of profit. It is the producer's margin. It is the producer margins. So margin of profit is 10 rupees. Margin of profit is 10 rupees. Now the cost have come, or the selling price for the producers have come rupees 50. The selling price for the producer has come rupees 50. That's how we find the price of a product in cost plus pricing. Is it as easy, as simple as that? Moving toward the break even analysis, or the target profit pricing. The target profit pricing, it is a graphical, means the break even point, a graphical finding of the pricing, a graphical finding of the pricing. You know TR and TC, total revenue and total cost. On a graph, according to the figures or data, we create TR and total cost, means the total revenue and total cost, and they both where they both cut each other. That point is known as break even point. That point is known as break even point, and because it is break even analysis and target profit pricing, the point or the data, they cut each other, the break even point, that point is known as the selling price. That point is known as the selling price. That's it. Demand oriented pricing. After the cost oriented, now we will see the demand oriented pricing. Demand oriented pricing is based on the estimate of how much sales volume can be expected at various price, which can be paid by different types of buyers. By different types of buyers. By different types of buyers. It's generally this type of demand oriented pricing happens in the grocery things, the vegetable things. Okay, the higher the demand goes and the lower the supply of that grocery or of that vegetable, particular vegetable, the price goes high and high. The price goes high and high. You have faced this demand orientation pricing. You must have faced this. Now, this also follows two types of methods in it. First one is differential pricing, and second one is perceived value pricing. Differential pricing and perceived value pricing. Generally, different groups of buyer have different wants and desire. Consequently, the intensity of their demand for the product would also be different. In such situation, for the same product, seller would tempted to charge higher price for those having less elastic demand and lower price for those having more elastic demand. More elastic demand. It depends on the location of the customer, the product of the customer, the paying capacity of the customer. Okay. Perceived value pricing. Different buyers often have different perception of the same product on the basis of its value to them. Okay, a cup of tea is priced differently by hotels and restaurants of different categories because buyer will assign different value to the same item. If you are, see, if you are buying a cup of tea from a store from a store, then you can have that a cup of tea in 10 rupees only. Generally in India it is 10 rupees. But if you are having a cup of tea in a hotel, in a restaurant, okay, in a normal restaurant, the cup of tea will cost you at least 150 to 200 rupees. And if you go to a more fancy restaurant than the previous one, it will cost you 300 and 400, between 500 and 600 somehow. But if you go to another fancy or five-star hotel or restaurant, it will cost you more. That's how perceived value pricing works. Okay, it's the same cup of tea. They may be using a different way to create the tea, or different some different ingredients, but the base of the product is same. Okay, that's how perceived value pricing is done. Is this understood?
Yes, ma.
All right. Competition oriented pricing, going rate pricing. This is the important method under competition oriented pricing approach. In this case, the firm doesn't maintain an elaborate record of various product costs. The firm also does not try to ascertain the differences in the intensity of demand or the perception of the value of the product in the minds of the buyers. The firm decides the price of its products on the going rate prices in the market. The price is not necessarily the same as that charged by the competitors or by the industry leaders. It can be lower or higher. All right. Now with this pricing, we have completed this unit. Moving further to next unit. Financial management it is. Okay. Wait a minute. Provides finance history. All right. Financial management. See, financial management is related to, yes. What is the problem? What's the issue?
No, sorry, ma'am. It was a mistake.
All right. Yeah, what I was talking about. Yeah, financial management. So, financial management is concerned with planning and controlling of resources of firms. Okay, resources or finance of the firm. Finance is the management of the monetary affairs of a company. It includes determining what has to be paid for, raising the money on the best terms available, and devoting the available resources to best uses. Okay, financial management is the important part of any business. You need to manage your finance. Okay, that's why we have a finance manager in our firm as well. Because now I'm giving you a situation. Now you want you want some money for your firm. Okay, you want funds for your firm and you do not have much funds, so you need to take funds from the external market, from the industry, or you can just take the loan. So the financial manager, being a financial manager, the manager will see all the option they can have money from. Okay, either they can go to the bank or any private financial institutes, or if it is a company, in the case of a public company, they can issue the shares. So they will determine the thing, if they are needed that money for new product, for existing product, and what are the expectations from that product or the project, how much return they are expecting, how much least uh, expectation, means the least profit expectations from that product or the project. So all thing is considered by the financial manager, and the cost of taking the loan from bank, from financial institutes, and from shares or and debentures, all should be considered. And after the consideration which will benefit the firm, that decision should be taken by the financial manager. And that's how financial management helps a business firm or organization to run in a long way. Understood? They manage all the finance thing. Now, functions of financial management. Functions of financial management. First thing is estimation of capital requirement. Estimation of capital requirement. They should be aware that they need that much of capital, okay, that much of funds for the project, for the next project, or the existing project. So they should estimate the capital requirements. Determining of capital composition. Determining of capital composition means they will tell you about that these are some short term loans. We have these we have, as a company we have 5 lakh short term debt, 10 lakh long term debt, and we had owner's equity of 50 lakh. These kind of things will be determined by the financial management only. Choice of sources of fund. Choice of sources of funds, like they can have the funds by issuing of shares and debentures, by taking loan from banks and financial institutions, I just explained this, and public deposit to be drawn in the form of bonds. Which source will benefit the company? The source that will benefit the company is chosen by the financial management. Investment of funds. If they have excess of funds, then they needed to invest it, and they need to think about they need to think about those investment as well, so that they can earn a reasonable or a high profit out of those funds. Okay. Disposal of surplus. If they are having a surplus amount or surplus fund in their business, then they can take out that fund and invest it in a invest it in a way which will benefit them in the future. Okay, like dividend declaration, retained profit, they can put the surplus in the form of retained profit as well. Now, management of cash. All the management of cash is done by the financial management department. Financial controls. Okay, like spending extra on some things. They should be controlled. Exercise control over finances. Proper utilization of funds. They will see that no one is wasting the funds. Okay, no one is wasting the funds. If you are, suppose if you are taking money, being an employee, if you are taking money from a company and you are not giving the proper work to the company, then you will become the wastage for the firm. Means somehow you are wasting their money, wasting their finance, and it is the responsibility of any financial management to see or stop all those wastage of finance. Okay. Now, objective of financial management. What are the objectives of financial management? First one is profit maximization approach, and the second thing is wealth maximization approach. Profit maximization approach and wealth maximization approach. According to this approach, action that increase profit should be undertaken and decrease the profit should be avoided. Means finance management should only target on the profit maximization according to this approach. Okay, and in this profit maximization approach, they need to consider this point like ambiguity, timing of benefit, and quality of benefits. All these things should be considered. Now, after this, the wealth maximization approach. When we discuss the wealth maximization approach means maximizing the net present value or wealth of a course of action of the company. Okay, it tries to remove the technical limitations of profit maximization approach. Technical limitation of profit maximization approach. That's it. We will just see the difference between profit maximization and wealth maximization. It will give you a clear understanding of both. See, profit may be considered into two sense: profit maximization for the owner and profit maximization for others. Normally, profit is linked with the efficiency, therefore, it is the test of efficiency. The limitation of this concept may be ambiguity, which reflects different interpretation from different persons. Now, quality of profit. Usually, profit is calculated in rupees or in currency, any currency. The amount earned is known as profit. It ignores the wastage, efficiency of employees, employees' skill, employees' turnover, product mix, manufacturing process, administrative setup, and everything which influence profit. Okay, they just focus on the profit. Timing timing of benefit. In inflationary condition, the value of profit may decrease. Therefore, the profit may not be comparable over a longer period span. Okay. Now, sources of finance. It is the important topic. Sources of finance. In this, we will discuss from where a company gets funds for their products or upcoming projects and fulfill their requirement for capital increasement. Okay, the first thing here is of shares. According to Companies Act 2013, share means a share in the share capital of a company, including stock shares, are considered as a type of security. A type of security means a company a company can raise the fund by issuing shares to the market, by issuing shares to the public. Okay, a public company can raise the funds by issuing shares. And if I talk about IPO is initially public offering means a company is they are releasing shares for a new product. Okay, for the first time. Suppose a company deals in 10 to 15 products. It's a big company, they deal in 10 to 15 products, and they have issued many shares for the product, but there is one product they have never issued shares for, and now they are issuing shares for that product. Now they are issuing shares for that product. So when the first time they are sharing, means company directly raising funds out of it, company directly raising funds for that product, and this thing will be known as IPO, means initially public offerings. And if I give you the example of current time, Tata is a big company. Tata is a big company in India, and you may be aware of Tata. Okay, after I guess after 18 or 19 years, after 18 or 19 years, we will be seeing IPO for a product of Tata, IPO for a product of Tata, and they will start, they will release the shares in December, in early December. I don't know the particular day, but it is between 2 to 6, I guess. 2 to 6 December. So they are doing a IPO. Tata IPOs are coming. If someone want to invest, they can. Means the general public, if they say if the general public wants to invest in Tata, then they can. That's how IPO works. And once this IPO stop, and suppose I have purchased at least 100 shares of Tata, 100 share of Tata's IPO, okay, from this IPO. Now you want to purchase those shares as well, but you couldn't purchase because of the rush. Now, if I want to sell 40 shares out of it, I want to sell 40 shares out of it, then I will sell the 40 shares to you and you can purchase it. Then you will purchase those share in the second market, not in the primary market, because primary market is the dealing for directly to the company and the customers, means shares customers, trying to say here, okay. And when you purchase, when the buyer of shares will sell their share to someone else, it will be considered the secondary market for the shares. I hope my point is clear to you guys. Okay, this is all about shares. Now, coming back to the shares, we have two types of shares. We have two types of share. First one is equity shares, and second one is preference shares. Equity shares and preference shares. So, equity shares, these are the most important source of raising long-term capital by a company. These shares represent the ownership of a company. Okay, the capital raised by issuing equity share is known as the ownership of capital. And owners fund, if you have invested or purchased any equity share of the firm, any equity share of any company, then you will become the owner of that company for that part of your share. Means if you have purchased uh, 10,000 rupees share, 10,000 rupees equity share of a company, then you will become the owner of 10,000 rupees worth of that company. Okay. Equity share capital is a prerequisite creation of a company. Equity shareholder do not get a fixed dividend. Here is the main difference between preference share or equity share. Equity shareholder do not get a fixed dividend. If suppose there are no more profit in a year, okay, then the equity shareholders may not get that much profit, or they may not get profit, any kind of profit. Okay, that's what equity share is. Means they are becoming the general owner of that firm and behave like same. They have voting rights. Equity shareholders have the voting rights in the firm. Now, the important merit of raising funds through issuing equity share are as follows. Equity shares are suitable for those investors who are ready to take risk for higher returns. For higher returns. Your money can drown as well. Okay, if you buy the equity shares. If you buy shares of a wrong company at a wrong time, your money can drown. But if you are able to take the risk, then you may get the higher returns in future. Payment of dividend is not compulsory for equity shareholders. Therefore, there is no burden on the company for payment of dividend to them. Okay, means they are not entitled for, or they are not promised to provided a payment of dividend, regular payment of dividend to them. If company faces losses, then they will not get any kind of dividend. If company have less profit, then also company can decide if they want to distribute dividend to their shareholders or not. Equity capital is permanent capital. It is repaid only at the time of liquidation of a company. They are repaid only at the time of liquidation of a company when the company dissolve. Okay, the company are paid after all settlement. Means, uh, I will explain this later. I will explain this point later after the preference share company. Okay. It provide credits worthiness to the company. Funds may be raised through equity issue without creating any charge or an asset of the company. The asset of a company may not be required to be mortgaged for the purpose of borrowings. Okay, they enjoy the voting rights of equity shareholder, facilitates the democratic control over the management of the company. Means the board of director, when there is uh, there is an election for BOD, means the board of directors, okay, management of the company, then they have, if you have the equity share of any company, then you have a voting right. You can vote for your favorite person to sit on the boards, in the boards of directors. Okay, demerits of equity shareholder to the shareholders. What are the demerits for the shareholders? Uncertainty about the payment of dividend. Okay, if there is less, or even sometimes there are profit, company do not want to give the dividends to the equity shareholders. Okay, speculative, like there may be speculation on the price of equity shares. This may happen at the times of boom when company pays high dividend. Okay, danger of over capitalization. If the management is not able to predict long-term financial requirement, it may raise more funds than the required by issuing shares. So this may lead to overcapitalization. The overcapitalization result into low value of share in the stock market. In the stock market, ownership in name only, means if you have purchased, suppose you have purchased 10,000 rupees equity share of a company, now you have become the owner of that company. But that you can't go to that company and say I am the owner of that company and will enjoy any kind of perks in that company. That's not, means the ownership in name only. Ownership of that company is in name only. Higher risk, because you are investing in the equity shareholders. If the company drown, you will drown with them. So they are at higher risk. And what are the demerits of equity shares to the management? No trading on equity. They can't trade it on equity. Conflict of interest. You are aware that the equity shareholders carry voting rights. Therefore, the groups are formed to corner the votes. Okay, such group grab the control of the company. The conflict of interest may develop, which may be harmful for smooth functioning of the company. Now coming to the preference share. Preference shares. After discussing the equity shares, we are coming to the preference share. Preference shares have first reference is that preference share have a they have a fixed dividend. They get a fixed dividend. Okay. Preference share refers to those share which have certain special rights. They enjoy some special rights. The dividend is payable on this share before the equity shares. Capital is repaid. Equity means is a shareholders that can take the risk of the company. I might throw. Equity doesn't mean a shareholder. See, if you are purchasing equity shares, equity can be of owner as well. Owner's equity. We have learned in accountancy that we have two types of capital. We have two types of capital. First one is owner's capital. Okay. And the second one is the share, means the shareholders. Equity can be both. Equity is a broader term. All right. And they are not taking, suppose you have invested 20,000 bucks in a company, then you can't take the risk of the company, but you can take the risk of that 20,000. Means if the company drones in future, if the company is drawn in future, your 20,000 rupees will drawn. It's not like the public, you will be asked to pay crore rupees. Okay, if you're investing in a company and company become insolvent, okay, they have a liability or a debt of billion rupees, they owe billion rupees to other people. That doesn't mean you need to pay that. It's not the complete risk you are taking for the company. It's the risk investing. Means if you are investing 20,000 rupees in the company, then you are taking risk of 20,000 rupees. Either you can get 30,000 out of this 20,000, or you can get a zero. That's what the risk is about. Okay. Whatever the amount you are investing, you are risking that only. That's my point is. Now coming back to the preference shares. So preference shares is dividend is payable on these shares before the equity shares. Okay. Okay. Preference shareholders do not have the voting rights. Please consider it. Please consider this point. All right. The voting rights may be claimed if dividend are not paid to the cumulative preference and all. All right. Now, which I have said earlier, explain. I will explain the point of repaying after. Now it's time. Now suppose we have invested in a company. A company is dissolving. Okay, we are liquidating a company, we are shutting down a company, and it has shareholders, both equity shareholders, preference shareholders, debentures, and the loans. Debentures and the loan. Debenture is also considered as the outsider's loan. Debenture is also considered as outsider loan. Debentures are outsiders loan. Okay. Now it when we liquidate our company, when we winding up our company, now we need to follow a rule. First thing is, like, you need to repay to the outsiders first. You need to repay to the outsider first. Okay. So the first person you will repay when you are winding up your company is the outsider, and those outsider will be debenture. If you are the debenture holder of a company, then in the case of winding up, you will get the return or the amount first. Okay, you will get the amount first. After after giving the money to the outsiders liability or debentures, the money remains with the company. Okay, the amount remains with the company. Now the company will provide that amount to the shareholders, but Listen to it carefully. First, the amount will be repaid to the preference shares holder. Preference shareholder. Okay, that's the special right they have. That's the special right they have. Because they do not share any kind of voting rights. Okay, they have not intervene in your management. All right, they may get a dividend, they might got a dividend, but you need to repay the preference shareholder first before the equity shareholder. After paying back to the preference shareholder whatever amount remains, you will distribute that amount to the equity shareholders. And suppose and suppose in case of insolvency, the amount finishes at the preference shareholders. There is no need to pay to the equity shareholder. If amount doesn't remain, you not need to pay to the equity shareholders. They will be treated as the owner only. At the time of repayment, they will be treated as owner. Am I clear? Because owner is the last to get the money, so they are the last to get the money back. Are my points clear?
Yes, clear.
Okay, all right. Now we understand what the difference between equity shareholder and preference shares. Here, some merits and demerits are mentioned for preference shares. Like demerits are they have no voting rights, they get low returns. Okay, they have limited appeal, fixed obligation. The company is bound to pay the dividend on preference shares at a fixed rate. At a fixed rate. If company, in case if company get high profit, okay, high margins, then as well they will get the fixed rate. So there is no benefit. Debentures. Debentures is a type of loan. Okay, just like we issue a company issue shares, just like a company issue preference shares, the same way a company issues debentures, and the person or the public who buys debentures is known as a debenture holder. And debentures holder will get interest. They are not getting a dividend because debenture is a type of loan for a company. Debenture is a loan for a company, and this loan is from the general public, because general public is buying the debentures, and that's why it is a loan for the company. And that's why only they are the general public or the debenture holder will get interest as the part of revenue out of those debentures. Okay. According to Companies Act 2013, Section 2 of 13 sub-block, it has written that debentures include debenture stocks, bond, or any other instrument of a company evidencing a debt, whether consisting a charge on the company's asset or not. And debentures can be of this type, three types: convertible, okay, non-convertible, secured or unsecured, redeem or irredeemable. Let's discuss the types of debenture. First one is convertible. First one is convertible. Convertible debentures. These debentures may be converted into equity share for issuing company after a predetermined period of time. Means companies in this situation, company says, today we are providing you the debentures. If you want to purchase, you can purchase. And these are convertible debentures. These are convertible debentures. If company unable to pay those debentures on time, then they will then they will convert those debentures into the equity shareholders. And as you already know, a company is not bounded to repay the equity shareholder till the time of its liquidation. It will benefit the company. Okay, and it will benefit the debenture holders too, if they are interested in, if they are interested in equity shareholder, and they have enjoyed a particular or fixed rate of interest for a time period. Now if they have converted the debentures into the shareholders, into the equity shareholders, then they will enjoy the dividend, okay, the profits. So this is convertible debentures, partly convertible and fully convertible. Means the ratio of the debentures. If some company have issued 60,000 debentures, and out of those 40,000 debentures were convertible and 20,000 were not, so these are the partly convertible. And if they have issued 60,000 debentures and all the debentures could be convertible debentures, could be converted into shareholders or equity shareholders, then it is known as fully convertible debentures. And after convertible, we have non-convertible debentures, the debentures which cannot be converted into any kind of equity share. Okay, any kind of share. Security. Security have two types, like secured debentures or unsecured debentures. Secured debentures. These debentures are secured by a charge on the fixed asset, on the issuer company. Okay, in case the issuer company fails to make payment of principal or interest, the asset of the issuer company may be sold to make the payment of the secured debentures holder. If you have purchased a secured debenture and that company become insolvent, okay, unluckily that company become insolvent in future, now you can, you have a right, not particularly you, but the debenture holders have a right to get their payment, their principal or the interest by by solding the asset of that company. Okay, that doesn't mean that a debenture holder will go to the company and take their share and sell it to the market. No, the government or the party who is helping the in the liquidation of the firm will do this thing. Okay, and unsecured debentures, it's the opposite of secured debentures. Redemption redemption and irredeemable means you can redeem the debenture or irredeem. These are the debentures which are redeemed or paid off after the termination of fixed term. Suppose you have issued the debentures for 4 years, for 5 years. Okay, now after 5 years the debenture will automatically redeemed, means you need to pay back to the debenture holder. The amount includes the principal amount and the current year's interest. The company may redeem all the debentures at a specific date. All right. Irredeemable or perpetual debentures. These are the debentures which do not have any fixed date of redemption. Means when as a company you issue debentures, you will not mention that you will redeem those debentures in 5 years, in 6 years. So there is no redemption policy in this debenture. What are the merits of debenture? See, the tax benefit, reliable source of long term finance. Okay, you do not need to share your profits, and that's the benefit. Venture capital. Venture capital. These days, venture capital has emerged as an important source of finance. The investors invest in startup companies like micro, small, or medium sized enterprises, MSME, we say, okay, with long term growth perspective. The investment is made particularly for starting the business and expansion for the business consideration, the long term potential. The capital invested in such project is known as venture capital. The capital invested in such product is known as venture capital. The person who contributes capital in such product or project is known as venture capitalist. It is important method of equity financing for long term growth potential enterprises. Okay? And the venture capitalist may be professionals in many fields. They provide funds for earning high returns. They take active part in the management of enterprise. Okay. They provide professional expertise help to the organization. Lease financing. Lease financing. A lease is a contractual agreement whereby one party, the owner of the asset, grants the other party the right to use the asset in return for a periodic payment. To return for a periodic payment. Okay. The party whom the asset is given is called leasee, and the party or the owner of the asset is known as lessor. Lessor. So we have some type of lease, finance lease. The lessor transfer substantially all the risk and rewards of ownership of asset to the lessee for lease rentals. The lessee is brought in same condition as he or she would have been if he or she had purchased the asset. Therefore, there are two phases of finance lease. The first phase is known as primary phase, and the primary phase is non-cancelable period. Means you cannot cancel the finance lease for a particular time period. And the lessor recovers his investment through the rent of the lease. Alright. Second is operating lease. Lease, which is not finance lease, is called operating lease. In case of operating lease, the risk and reward incidental to the ownership of the asset are not transferred by the lessor to lease. Means ownership remains to the lessor only. Okay. The terms of such lease is much less than the economic life of an asset. Some advantages. Security market. Security market. Now we have learned that the finance being raised by or raised through the equity shares, debentures, venture capital, lease financing. Security market is another important source of raising the finance. The security market consists of primary market and secondary market. Primary market and secondary market. In security market, the securities are brought and sold on the basis of demand and supplies of securities. All right. It consists equity market, bond market, and derivative market. It plays a crucial role in the economy. The fund is channelized from savers to investor by the security market. As I have given you the example of IPO, like when sell you the shares, okay, that will consider with the secondary market. But if you are purchasing the share directly from the IPO, okay, from the company, it is known as the primary market. In the primary market, new securities are issued. As you can see, new securities, new shares are issued. And this could be bonds, government could issue the new bonds, and corporate issue security, any kind of security can be issued. But If they are issued or new, if the securities are new, then it will be considered as primary market. All right. Public issue, right issues, private placements, preferential allotments, IPO, initial public issue. Okay, IPO we say it, and etc. things. Shares are being issued in this, debentures are being issued in this. Now, the second market, a market where the securities are traded, which were initially offered to the public in the primary market and or listed of the stock exchange, is known as secondary market. Okay, now we are just exchanging the security from one person to another person. All right, that's the only difference between primary and secondary market. Role of SEBI, Security Exchanging Board of India. SEBI is Security Exchange Board of India, which looks after the shareholders, debentures, all the securities market. Okay, both primary and secondary market. That's it. Now, the last unit of this block or this subject is related to the human resource management. Human resource management. Okay, I'm just taking 1 minute break. Is it clear till here? Please ask if you have any query till here.
Thank you, ma'am. No query for now. Thank you.
Okay, please. Okay, human resource management, HRM we call it in a short form. So, it is a function concentrated on recruiting, managing, and directing people who work in an organization. Who work in an organization. Okay. It deals with issues related to compensation, performance management, organization development, safety, wellness, benefits, employees, motivation, training, and etc. All the things related with the human resource of your organization. Either they are your employees, they are managers. Okay, this department deals with the human resource management. HRM plays a strategic role in managing people and the workplace culture and environment. The HR function of an organization, the HRM function of an organization has a very critical role to play in an organization. When the organization realizes the value of its people and the responsibilities, it indicates that the HR department has emerged as a true support for all the managers. For all the managers. Now we will see some definition of HR. See, human resource management is the process of acquisition, utilization, and development, compensation and reward, integration, maintenance, separation of human resources of an organization, and separation of human resources of an organization. That's the definition of human resource management. Now, HRM have three functions. First one is managerial function, second one is operative function, and third one is advisory function. Let's see them one by one. Managerial functions. Managerial function. This is the function which is played by every manager in the firm, and they need to plan. They do planning in this, organizing, directing, and controlling everything. This management function we have discussed earlier as well. Planning involves deciding human resources goal, formulating human resource policies, and preparing the human resource budget. Because we are working under the human resource management, and this is the management function of human resource. That's why we are planning only about the human resource goal, human resource budget means the salaries you need to pay to the your employees, and human resources policies, the better policies you can give to your employees. Organizing. Organizing involves developing the organizing structure, establishing the relation among the jobs, and allocating the resources to perform the organization objectives. Directing. Directing help in building sound individual and human relations in the organization. Controlling. Controlling the management of human resource involves auditing, training, okay, analyzing labor turnover records, directing survey, conducting separation interviews, and such other means. Okay, these are the functions played by the managerial functions in HRM department. Now coming to the operative function, the procurement function. It is concerned with the acquisition of a proper kind and number of personnel necessary to accomplish the organizational goals. It deals with specifically the following activities like human resource planning. Human resource planning. It means you need to forecast the human resources need for the organization. In simple words, if I say, if you have employees in your firm, then you need to think that whether there is a need of two more employees in your firm. Okay, if the eight are enough, then it is okay, and if the person or more employees is needed to your department, then you will inform that in HR department, and human resource department will plan accordingly and try to fulfill the the gap, okay, the requirement, the humans requirement for your work. Now, after doing the planning, they will do a job analysis. HR department will do the job analysis. Suppose this is the job of accounting. Okay, this is the job of accountant. Then they will think every person who can do accounts. Okay, they will consider the skills they required in the person they want to hire, the abilities they are looking for, the responsibility of that person they can give to that person or the employee they will hire. Okay, the job analysis is the first thing. After that, they will do job design. Job design is a written record of overall summary about the kind of work to be done. Like as an accountant, you need to prepare the accounts, journal, ledger, record the transaction. Everything will be written in the job design. After that, you will do the recruitment. You will do the recruitment. It is the process of identifying the vacant post and taking step to get candidate for such position. It is a positive function. Always remember, it is a positive function. Recruitment is a positive function, and selection is a negative function. It is a positive function to getting sufficient number of candidates for the vacant new position, because recruitment, suppose you have two vacancies of accountant in your firm. Now you will post it about on Instagram, on any social media account, okay, and you will inform people that there is a vacant or there is a room for that person or that special skill. Now you are asking persons to come to your organization, means for those two vacant posts you are asking you are seeing some 100 people, 200 people, they are applying for the same post. You want more and more people to apply, and so that you can choose one out of them, the best out of them. So recruitment is a positive function because they are expecting more and more people. Now, after recruitment, they do interview. The HR department will take an interview for each interview of each candidate. Before interview, they can have a written exam as well. It's up to the organization policy. Okay. Now, coming to the selection process, after taking interview, after knowing everything about a person, now we need to select. Now, suppose we have uh, we have posted for job for two jobs, okay, for two vacant jobs. Now 100 people have come and they have given interview. In the selection process, you will remove 98 people, you will remove 98 people. So that's why selection is known as a negative function. That's why selection is known as a negative function, because it removes the extra people. It is the part of choosing, and for to choose someone you need to remove extra things or extra person. So selection is a negative process. And after selecting those two candidates which best fit to your job description, you will hire them. Okay, send a letter to them, hiring letter, and then you will socialize with them. That's it. This is all about the orientation function, sorry, operative function. Operative function. Is it clear?
Yes,
Yes,
ma'am.
it's clear.
Yes, ma'am.
Development function. Now, after recruitment, okay, after the procurement function, now you have hired that person. Now you have hired that person. You will train that person according to the needs of your organization. Then the career development, the promotion you can provide him or her in next 4 years, 3 years. The management development, performance appraisal, and performance management, everything you will do. Now coming to the last function of HR department, which is compensating function. Compensating function like job evaluation, wages and salary administration, how much bonus and incentive you will provide to your employees according to their work. Okay, and the integration function. Integration function consists the reconciling the goals of an organization with its member. Okay, and in this thing you will work together productively. You will provide a good working environment to your employees so that they can work effectively and efficiently. A healthy environment. Okay, the functions involved in integration function is motivating the employees, boosting employees morale, collective bargaining, workers participation in management, readdress the employees grievance properly. Okay, handling disciplinary cases by means of establishment disciplinary procedures, and providing other policies to the employees and other things. In separation function, if some employee is not doing their work properly, then you will out process them. Okay, exit interview, you will ask them to or you will give the time, the required time to that employee if they are not working properly. And if they not work properly in that time as well, then they you will retire them. Okay, retirement benefits and other things. Either, or sometimes after a age people get retired too. So these are the exiting interview or exiting policy, separation policy of HR department. And after that post vacant, after there's a room or vacancy for the same, you will rehire. You will rehire. Advisory function. Advisory function means HR manager has specialized education and training in managing human resources. He or she is an expert in his area. He or she advises on the matters relating to human resources of the organization, like top management. They will advise to the departmental heads and etc. All right. Skills of HR professionals. What are the skills HR professionals have? Multitasking skill to deal with many aspects of business, like fast priorities also changes time to time. They should have the leadership, organizational culture, and finding suitable candidates. Okay, understanding the work environment. Interpersonal skills. Interpersonal skills, in order to be an effective manager they must possess a strong interpersonal skill as well as the decision making skill. Communication skill is required in any job. Okay. Negotiation skills, like if you are hiring an employee, you are able to negotiate. You are able to negotiate on salary and benefits. Problem solving and conflict management. If there is an urgent requirement of a person in a department, then it should HR should be problem solving. Suppose a person is required in finance department, okay, in urgent, and you do not have time to hire a person for that thing, and this work is really important, which is to be done by the person. Now, being an HR department, it's your responsibility to find out a suitable person out of the employees of your organization and shift that person to the required place. Okay. Assessment skills, instruction design skills, organizational skills, ethics, strategic skills, fairness, development skills. These all skills are required by HR. Okay. Competitive challenge influence HRM. Some challenges which influences human resource management of a company. Responding strategically to changes in the marketplace. In today's highly competitive environment, the competition has been global and innovation has emerged as a continuous process. As a result, innovation and adaptation have become the key to capturing opportunities and overcome obstacles. Adaptation of innovation practices facilitates the source of organization. Now, competing, recruiting, and staffing globally. For example, BMW has traditionally been a German brand, but now the automaker builds car in the United States, China, and elsewhere. In globalization, managers have to balance a complicated set of issues related to the different geographies, including different cultures, employment laws, practices, and the safety of employees and the facilities abroad. Setting and achieving corporate social responsibility and sustainability goal. Advancing HRM through technology. They need to opt the advancing technology in HRM as well. Managing cost while retaining top talent and maximizing productivity. Responding to the demographic and workforce diversity. These all are the functions performed by HR. Dynamics of the employer employee relations. What are the dynamics? Here, some factors like the scope of the labor law is too narrow or it is too narrowly interpreted. The employment relationship is disguised. The relationship is objectively ambiguous, giving rise to doubts as to whether or not employment relation really exist. That's not so important. This one, major features of employer-employee relations. Some major feature we will discuss of employer and employee relations, like the outcome of employment relationship. If we have good if we have a good relationship between two employment, okay, employee and employee relations are good, employer and employees relations are good, the work of the organization is also good, it would be efficient and effective, inclusive of individual relation as well as the collective relation, as well as the collective relations. Like if a manager and an employee have a good relation in HR, okay, and if all the manager sorry if all the employees and the manager have a good relation and one employee doesn't have a good relation with the manager, then in that case the result of the inclusive relation between the collective employees and the manager will affect your company. Complex and multidimensional. Dynamics means keep on changing and developing. Yeah, that's it. I guess it's enough, and it's all about HR department. Now it's time to conclude this class as well. That's it. This is all about the employees and employment. I hope you understood the HR department or human resource management.
Yes, ma'am.
All right. So, wait a minute, wait a minute. Let me represent it. So that's okay. Please turn on your cameras so I can wait a minute. Let me first save the first snip. Just wait a minute. I will take the attendance in a minute. Wait a minute. Okay, turn on your cameras so I can take the attendance. All at once. Everyone. I'm waiting for the last person. November. Alright, I'm taking the attendance. Okay, it's done.
Okay.
Okay, it's done. You can turn off your cameras. All right. It was your last class for business management and financial accounting both. Okay, and I wish you good luck for your exams whenever they happen. Okay, all the best for
Okay.
this.
Thank you very much.
All the best for this
Eh,
course, and thank you for your cooperation.
And thank you very much for your time.
Thank you, ma'am. Excuse, ma'am, please.
Thank you, ma'am, for the time. But
Yes,
ma, I
yes,
have
I'm
a
listening.
question. Issue.
Yes, ma'am. Ma'am, are we before our exams? Are we conducting any test or assignment on your course?
Uh, that thing will be informed to you guys. Okay. Right now, I don't have any kind of information. All right. And
Thank you.
as earlier we have provided you an email, just keep writing to that. I understand sometimes it takes time to respond. Okay, I can understand
Yes.
your point of view, but you needed to do writing to that email. Okay, keep writing.
Okay, ma'am.
All right, thank you.
All right, ma. Thank you.
All right, thank you to you too.
Okay, ma.
Bye
Well done.
bye, and wish luck to others as well, to other students.
Okay. Well done, ma. Okay,
They
we
will
wish that.
definitely hear that. Thank you.
Bye.
Bye bye. I'm concluding this session. Thanks a lot.